Okay. Hey, JD, do you want to introduce yourself and your project for us really quick?
Hey guys, sorry about that. Was super weird connection there. Anyways, yeah, JD Gagnon. I'm one of the founders of BenQi, and I'm assuming most people here know what BenQi is, but we're algorithmic liquidity money market on Avalanche.
Awesome. Yeah, really excited to have you guys building here. Lending, borrowing, definitely needed here. And Justin, you want to say hello to the group, and Brandon?
Hey everyone, Justin here, PM at Pangolin. Yeah.
Yeah, mic check. It's Brandon. Sounds like it's coming through. Lead dev for Pangolin.
Awesome, thanks. And yeah, I'm Leo, community manager. So let's jump right into the questions then. So we're taking 3 questions from Twitter. Appreciate everyone who posted questions for us. And the first one is about why Banky chose Avalanche. JD, you want to tell us a bit more about why Avalanche over the other chains?
Yeah, hopefully you guys can hear me well. I'm getting some weird feedback when somebody other than me is speaking, but maybe just send me a note, Leo, if you cannot hear me well. But good question, why we chose Avalanche. There's quite a few reasons, actually. The first one being we're big fans of Avalanche. We believe in the technology. We've been following, all of us, the project from the early days. Excited about what Avalanche brings, the potential for DeFi, what that actually means from a user perspective for lending protocols, but probably more specifically is what the subnets offer. I'm not sure how deep you want me to go into this here, Leo, but the subnets on Avalanche offer a unique advantage beyond the obvious, but being able to KYC and ensure AML compliance on subnets, it really opens up an entirely new realm of regulatory compliance and building frameworks to different regulatory structures globally, whether it's segmented by geography or whether it's a global structure. The subnets really allow from a compliance standpoint, and then of course from a technological standpoint, if we do have multiple subnets for different areas of the world, they can communicate and work really well together. So we are obviously in it for the tech, and again, we've have some other projects that are also coming for the Avalanche network as well, and as a consequence of that, we have a great relationship with the Avalabs team, and it's been nothing but support. So we're excited to be building on Avalanche.
Wow, that's awesome. I think you nailed it. Yeah, I think the subnets are going to be huge, and a lot of projects are going to be taking advantage of that. And what do you think, Brandon and Justin? What would you say to projects building about why Avalanche?
I'll jump in, yeah. So yeah, obviously, I mean, everyone talks about the consensus mechanism. So that's obviously a critical part if we see DeFi, taking on a mainstream adoption across the world. So in order for DeFi to become mainstream, you do need, the speed and the capabilities that Avalanche displays. So that's one thing. I think it's very well placed to take a broader adoption. And then like JD said, like subnets are, I mean, if anyone's spoken to me for 5 minutes, they probably know how much I love subnets and the concept behind subnets. So the obviously is incredible, but the community is also incredibly supportive. And yeah, just a really nice place to build protocols.
Yeah, especially as more regulation comes into the space, I think those subnets are going to be more and more important and something that sets Avalanche apart from some of the other chains. Right now, it's just kind of this looming future promise. There's a couple of implementations, like now we can develop VMs as of last week. But I don't think they're really going to shine until that regulation starts coming in.
Yeah, great insight. And it's great to see all these projects thinking about subnets and how to use the unique offerings of Avalanche. So appreciate that question and good answers, guys. Cool. Let's take another question from Twitter then. A second question from Twitter is Banky the same or different with other borrowing and lending protocols? What are the differences? Can you tell us, JD?
Yeah, absolutely. Good question. I mean, there's many similarities, I think, from a foundational level. Lending protocols over the last couple of years have evolved to a point that it makes sense kind of to backstop the greater DeFi activity base, especially on an evolving network like Avalanche. So there are a lot of similarities. I mean, it's algorithmic. It's focused on optimizing both yield for lenders and costs for borrowers, and of course, profitability for the protocol. So from a foundational level, I think reinventing the wheel with respect to lending protocols wasn't really necessary to begin with. First and foremost, we want to get out into the Avalanche ecosystem, make sure that we're secure and safe and predictable, reliable, which of course we're very confident in our ability to deliver on that at this point. But again, it is similar in a lot of ways. As we evolve, of course, where we really start to differ is some of the ways that we'll optimize the protocol. Some of the future developments, obviously, our focus in the medium and long term on subnet development and how that really connects with different ecosystems, cross-collateralization into fiat activities, working with family offices, hedge funds, and eventually investment banks and retail banks to figure out how to take your, in a compliant way, how to take your crypto activities and blend them or allow them to support and work symbiotically with what you're doing in a fiat capacity. And so that's one of our big focuses. Foundationally, of course, like I said, we need to build that kind of base layer on Avalanche from which other DeFi can be built. It helps build critical mass. It helps build velocity of assets throughout the ecosystem. There's obvious benefits for Pangolin and other DeFi protocols when lending protocols exist and are secure at a certain scale. And so that's our primary focus for now. I mean, there's some minor. You should get a magic 8 ball. My Siri's listening and wanting to talk to me here. There's some other differences, minor differences in how we the algorithms work and how we optimize for a growing ecosystem relative to a comparatively mature ecosystem in Ethereum. We have some great support in that regard. Some interesting things we'll be discussing more publicly in the coming days and weeks here. And I think it's pretty exciting. A lot of really exciting developments going on both for BenQi and in Avalanche in general.
Wow, that's great. Yeah, I appreciate you getting into depth about how a lot of it is the same, but a lot of it is different as well. Especially your plans to integrate with TradFi and fiat. So, what about Brandon and Justin? What do you guys think of BenQi and lending solutions coming onto Avalanche? Are you excited about that? And how can Pangolin integrate?
Yeah, look, lending is kind of one of those Lego blocks in DeFi, as well as traditional finance. So Avalanche so far has been more or less starving for someone to come in and provide that in a safe method to build on top of. I know there's some other protocols that have stuff lined up directly waiting for lending to be plugged in. I mean, everyone leverages on top of that as well.
Yeah. So for me personally, like I guess I wear two hats in this regard, as a personal investor and then as a builder. From a personal investor, I'm very excited because sometimes I'm quite risk averse, I guess, in managing. So I'm looking forward to being able to take tokens that I really love and being able to put it into a safe place and still get yield on it that I couldn't get off chain. So in that regard, I'm very excited from a personal level. And then from the broader ecosystem level, what I'm really excited about and what I think is going to be phenomenal to see is how you get these kind of protocols, like Brandon mentioned, right? These Lego blocks. So you get whole new use cases, so you get yield on yield on yield. You get this kind of cascading effect. And the possibilities and how creative people can do linking these protocols together, that's incredibly exciting to see from my point of view.
Yeah, great insight. Yeah, like you guys said, lending and borrowing is a key building block. It's on all the other major networks where DeFi is booming, and once we get it on Avalanche, it's going to open up so many new doors. So I'm also very excited. Okay, so great question about how Banky differentiates, and good insight from everyone speaking on this call. Thank you. Cool. So let's get into our last question from Twitter. The last question is, so as a algorithmic liquidity market protocol, what's your approach towards providing sufficient liquidity for your protocol and attracting users to BenQi Finance? Can you tell us a bit more, JD?
Yeah, absolutely. Great question. I mean, we have the obvious, I think, protocol level initiatives where liquidity mining will be attractive to begin with. We want to make sure that the yield is sufficient for people to want to bring assets into the ecosystem. We have we're in an environment that I think is a bit of a double-edged sword. It's amazing because we have a strong community. The Avalanche community, the BenQi community is very strong, eager to support quality projects that are starting to build DeFi. So that's very exciting. The other side of that sword is, a lot of liquidity has not yet found a home on Avalanche. And so it's exciting because these are some of the catalysts, really that lead to a very vibrant DeFi ecosystem. But you have to find ways to encourage and both to encourage people to bring liquidity over to the ecosystem, and then of course to find ways to encourage them to keep their liquidity in the ecosystem. So again, we have some attractive chi emissions that will start. We have a few other initiatives that will be rolling out pretty quickly, I think, that are quite exciting. But our focus, and I was going to talk a little bit before on what differentiates us from other protocols. It's not so much us versus them. It's really a focus on the community of inside of Avalanche, on the developer community, the stakeholders, and of course the users. And we're focused on Avalanche. We don't have plans of launching on other protocols, other networks. We really want to build solid relationships in the ecosystem, look for deep and thorough integrations, and build something that, again, is that kind of conservative-based, steady, trusted platform in the ecosystem. And as a consequence of that, I think you build evangelists, you build committed participants. We have some, of course, a very big focus really on making sure that we're managing yields in an appropriate way, we're managing solvency and liquidations in an appropriate way. And so people can count on BenQi to be a solid platform, both at the beginning and as other DeFi participants show up in the space. Our focus is on Avalanche and on the community. And in many ways, that's something that if you look at a lot of crypto projects, there's some amazing ones that seem to have fantastic staying power. And most often, those are built first and foremost on solid tech, but a great community and a focus on community and a focus on people making money and people feeling secure, people feeling like they have a voice. And so that's where we're going to start, is really focusing on our users. And I know we talk a lot about subnets and about fiat and hedge funds, et cetera, but none of that is possible without a consistent, predictable, solid critical mass on the base protocol. And that, again, starts with DeFi inside of Avalanche. So that's where our focus is.
Wow, that's really great. And it's good to hear you emphasize the community focus so much. I think that's a core value of Pangolin as well. So I see a lot of alignment between, BenQi and Pangolin in terms of core values. So what about the Pangolin team? What do you guys see as ways that BenQi or the ecosystem can help attract liquidity into lending protocols, into the network as a whole?
I think BenQi in particular offers another utilization for assets that's not currently here. Right, so Pangolin offers a lot of different avenues to take two assets and pair them together, where you have exposure to both of those. And some people are a little more particular in what they're looking to invest in, and it might just be one asset, and the notion of impermanent loss is too much or too scary or just not something that they have a enough of a desire. The risk reward doesn't come out in their favor doing that. And so when you get into something like what BenQi offers, you have more people wanting to come to the table for new products that are out there. I'm definitely interested in this just at a personal level. I think that's awesome to have that, like I said, a building block, as well as something that Pangolin wants to do in a similar sense is to integrate ourselves as deeply as we can, like you mentioned with other projects in the ecosystem, so that as they grow and as we grow, we can kind of do that together.
Great answer, Brendan. So the way I look at it is there's these kind of pies, right? So there's the Avalanche pie, then there's the Ethereum pie, and there's all these kind of liquidity spread across these different ecosystems. So currently what's happening is, we're all of the liquidity in Avalanche is kind of being distributed amongst all the protocols. So the plan is to then, get liquidity and attractive liquidity from these other L1s, L2s, in the case of, Polygon. But then there's also traditional finance, right? So the thing is, what you've got to do is you've got to look at all these different markets, and you've got to look at pathways or rails to bring that liquidity into Avalanche. And then what you've got to do is you've got to make sure that when that liquidity arrives, that it's got a safe home. It's got a home where that liquidity can earn very good yields, and it's got a thriving ecosystem. So, I see DeFi as approaching the mainstream, and to do that, that opens up almost unlimited liquidity and capital. So while definitely we should be looking at liquidity from, across the whole of the current DeFi ecosystem, for DeFi to grow as a whole, we have to broaden that part outside of, what's currently there. And I think user experience is going to be a key factor in that.
Awesome. Good answers. So I think to summarize from the Pangolin side, Banky offers unique ways to earn yield, such as just with single assets. And then we also have the perspective, I'm sure Banky does too, of just growing the Avalanche pie instead of just being focused on the pie that exists. So really appreciate that question about how to bring liquidity and users over, and really good answers from JD and from Brandon and Justin. Thank you. Cool. So let's, we got through the 3 questions from Twitter, and let's jump in.
I think,
go ahead, JD.
Leo, if you're open to it, I have one kind of follow-on answer for that, if there's time for it.
Yeah, definitely. Go ahead.
Cool. Yeah. Well, one of the other things I think that that will attract liquidity into the ecosystem is a bit of kind of that velocity or that multiplier effect. So when you're able to use single-sided pools like lending protocols, you're able to collateralize and borrow out assets that, $1 of assets going in allows you to collateralize a certain percentage of that and free up that equity, so to speak, into other lending protocols, which creates kind of a bit of a cyclical effect throughout the whole of DeFi. And I think, through a lot of partnerships with our venture partners, we were very humbled and grateful to have some of the venture partners we do, but we were also very strategic in who we decided to work with from a few different perspectives. And one of them is the potential impact on supporting our liquidity to begin with. Of course, we're looking to the community to support liquidity, but it really does provide a multiplier effect for some of the assets that are coming to Avalanche. And so prior, not necessarily as a silver bullet, but prior to BenQi being around, it was somewhat fragmented on where and how liquidity could be used. And for people to bridge over a decent amount of assets without consistent opportunities to utilize those assets in different protocols, and some low risk yield, higher risk yield, some more, for lack of a better term, degen farming. You need a healthy mix of all of the above, to convince people to bring assets into the network. And I think I'm a little bit biased, but I do believe we're at this incredible inflection point here on Avalanche, where there's a few major projects launching pretty quickly, and it really gives liquidity beyond just BenQi a reason to come and to stay. inside of Avalanche, more of a reason to see increased volumes on Pangolin and higher utilization of other DeFi protocols. And all of that really becomes a bit of a compounding cyclical effect. And it's really exciting. I think the next, few months in Avalanche are really going to be something none of us forget.
Wow, yeah, that's a great perspective. I appreciate that. Yeah, I think being on Avalanche, we already know what's great here, why we're here, and the risk level we're willing to take with our yield. But I think you called out something important, that people looking in from the outside, they look at different levels of risk when they want to earn yield. And you mentioned that we need to have a healthy mix of both low risk yield and high risk yield, which I think is really important. And Banky will provide that. So thanks for that perspective, JD. Really appreciate it. Cool. So we got through our 3 questions from Twitter. Really appreciate those. And we'll jump into some questions from the chat. So let's see where the questions are starting today. So this one is a good one about TradFi, specifically for Banky. And how do you plan to integrate TradFi into your product? And TradFi meaning traditional finance. Can you tell us a bit more, JD?
Yeah, great question. I think we've seen the beginnings of TradFi integrations with DeFi through some of the recent developments with Aave Pro Pools and Compound Treasury, and some of the ways that they're trying to connect with liquidity from outside DeFi, bring it into DeFi, and start to build that regulatory framework. From our perspective, again, I talked about this earlier, that the subnet infrastructure really allows us, from a regulatory compliance standpoint, to look at building things in such a way that other networks can't. And so it's not necessarily, from in our opinion, us versus them. It's really how can we build connection points, both from a technological standpoint through subnets into legacy tech, into some of the technologies that TradFi institutions currently use. How can we connect that in a real-time manner? Of course, we're interested in securing liquidity from outside of DeFi, but I think our largest focus is really working towards building a symbiotic relationship. And I use that word because I don't think in the next couple of decades anyways, we're going to see DeFi completely take over, and there will be no such thing as TradFi. For the foreseeable future, there will be some form of kind of collaborative, cooperative environment between the two systems of finance. And so our focus really is to work with industry stakeholders from the TradFi perspective, starting with focus groups and deep research and development from a technological standpoint, but also from a practical standpoint, as well as working with regulators to say, okay, here's what we want to do. This is the first time really that we can do this in a regulatory compliant way. So instead of completely rewriting the rules, we can find ways to integrate within the existing rules. And how can your activities then, as a DeFi user, there's a lot of people amassing wealth inside of DeFi, and more people that will be bringing wealth to participate in DeFi. And how can we use your DeFi wealth to also influence, support, impact your fiat activities? If you're a business or a growing net worth individual, can you cross collateralize between the two? How does that work? Can we liquidate collateral, DeFi collateral against a fiat loan? And how can that all function in real time? And so that's really where our focus is looking at, of course, we want to capture liquidity from outside of DeFi as a whole, meaning institutions looking for compliant ways to add significant liquidity into lending protocols. How can we do that? How can we work on the retail banking level to secure different styles of liquidity, but also in the opposite direction? Cross-collateralization is really interesting. It happens in every other facet of finance, and why shouldn't it happen with your DeFi activities into fiat, again, as individuals and as corporate entities? So that's our big focus, is building the frameworks, working with the regulators, because it's very novel. I mean, Compound and Aave are obviously doing a lot of work and have a lot of focus and attention on also building that framework. And as a group of DeFi projects, not just obviously them and us, but everybody else who's participating in a meaningful way as lending protocols, there's a lot of work to be done. And I think it's a very exciting future as we can build into proper cooperation between TradFi and DeFi.
Awesome, that's great. It sounds like you and your team have put a lot of thought into this, and I've also looked at the existing projects and how they do it. So I think it's really good that you've done so much thinking about this, and like you said, it's going to take some time to build out the frameworks. So what about the Pangolin team? What do you guys see as ways to integrate with traditional finance for Pangolin or for Avalanche?
Yeah, I'll jump on. Yeah, so we've got quite a few ideas around this. We're already working on some implementations to help ease the transition from non-DeFi natives to the broader broader world, really. I think JD put in some very, very great points in his answer. So, focus groups, meeting with regulators, finding out what they want to do. I think that's very important. I had a discussion yesterday about, how would Pangolin be able to provide an on-ramp for people without them knowing that they were participating in DeFi under the hood. And that brings some interesting questions to the table. It brings some questions about, okay, well, do we have to register with a regulatory body if we're offering, traditional savings accounts, if you will? How do we navigate those waters? So do we become a custodial? Do we still remain true to, I guess, our ethos of a non-custodial? How do you bridge those gaps to provide pathways for non-DeFi natives? So I don't think it's an evolving question. So there was a quote that I've heard a while ago, which I think is really good. It's, how do you build an airplane while it's taking off? And I think a lot of DeFi is like that. It's changing so quick, and there's so many advances so quickly that really it's like building an airplane while it's trying to take off. And to do that effectively, we do have to be open to a lot of different ideas and thoughts. And yeah, bridging that, subnets does give us an incredible opportunity to do that, because you can have these kind of permissioned silos that are permissioned within those regulatory constraints, which can then still interact with the broader ecosystem. So I think, once we start seeing those developing, the design space is going to be radically different.
Yeah, really good answer. I think everyone working in DeFi does have this on the back of their mind of, how do we integrate closer with TradFi? So good question and good answers. Appreciate that. Let's take another question. So this is a good question about the types of tokens that Banky will support. Specifically, they're asking if Avalanche native tokens will have a place in Banky. And maybe you could just tell us a bit broader, JD, about what tokens Banky will start off supporting.
Yeah, absolutely. This is a great question, one that we get asked often. And so there's kind of multiple steps to how Banky is going to launch. We have 6 assets to begin with. So we'll have AVAX, Link, Wrapped Bitcoin, Wrapped Ethereum, USDT, and DAI. And so there's a few reasons why we've selected those 6 assets to begin with and none other. First is really just the predictability and the risk mitigation, risk management. The liquidation infrastructure and the liquidity depth inside the ecosystem currently significantly limits what we can do while ensuring with a very high degree of certainty that the protocol remains solvent. So I think all of us would like to see a lot of assets on lending protocols. But again, Banky's first and foremost focus is to be that foundational piece of blue chip liquidity really inside the ecosystem. And so as time goes on and as we can build more experiential data inside of Avalanche, we have a very large focus on data. So as we can get data, how the liquidations are working, what the risk levels relatively speaking, are inside of the Avalanche ecosystem relative to what we've experienced or witnessed or studied on other networks. Then we'll start to look at opening up to some new assets, but we will most definitely be conservative in that regard. And again, it's not so much that we don't want to create liquidity for these types of assets. We really just want to ensure that we have a lot of stability and predictability inside of Banky. And that sort of does flow into our discussions with TradFi. We have to show a very solid track record of solvency in order to be considered in these conversations. So as we're beginning discussions with stakeholders outside of our immediate DeFi realm, those are some of the questions that they ask. What type of data are you tracking? How do you ensure solvency? Part of the decision for integrations will, of course, be based on what the data suggests Banky has been able to accomplish from a yield standpoint, stability standpoint, obviously security. So yeah, as assets grow inside of the Avalanche ecosystem, we'd love to be able to, from a risk managed perspective, be able to include Avalanche native assets, like PNG or Snowball or Yak or whichever ones were listed there. I saw the question, but that will definitely come only when we have the liquidity environment and the transaction volumes that we need to ensure solvency and predictability on the protocol.
Yeah, that makes a lot of sense. And you're using this term liquidation. Can you explain a bit for users who haven't seen this term a lot, what that means for a lending protocol?
Yeah, good question. So as with any type of lending and borrowing, I talk often about how banking was originally developed. And, long time before any of our lifetime, most likely, before fractional reserve banking and so on, it was pretty straightforward. The bank was an intermediary to connect lenders and borrowers, which is essentially what DeFi, at least what lending protocols, liquidity markets aim to do now. And that is, there was people that had assets. They were looking to secure some yield on those assets through a deposit and then lending it out. And there was a counterparty somewhere, and the bank was responsible, or the intermediary was responsible for finding said counterparty. And there was a spread on the cost of borrowing versus the yield of lending. And that was the bank's profit, essentially, for doing the intermediary work. And in this case, well, not just in this case, but also in that banking example, when you lent assets, you would also be able to use those assets as collateral to be able to borrow a different asset and use that other asset in a different environment. So an example of this is, let's say, hopefully most of us on this call are Avalanche proponents. We believe in the ecosystem. We believe in the future. So we really like to hold and own AVAX tokens. But having said that, if we have a decent amount of our portfolio in that token, we love the long exposure. We love to be long AVAX over a certain time horizon. But we might want to free up some of that equity to do other things. We might need some of that equity for personal uses. A few of us might do it for need some equity out of our more long-term assets, take it out and use it for degen farming. There's different use cases for this. There's also the reverse use case when you lend stables and borrow more volatile assets, but we won't get into that. Anyways, in the event that you lend an asset that has some amount of price volatility, we have a collateralization threshold, a maximum that you're able to borrow against that. And if you ever borrow right up to the maximum of what your collateralization allowable collateralization rate is, and the price moves against you of your asset that you're using as collateral, it actually requires that the protocol liquidates part of that position to keep you within the range of allowable collateralization. So for this to happen in a decentralized way, we have the protocol then puts up those assets for a third party to come and liquidate on behalf of the protocol. And what that means is they buy the assets that need to be liquidated. So you lent AVAX in that example. AVAX price goes down, hopefully not too much more than it is now. But it's always possible that those things happen. AVAX price goes down. You're now your loan is out of balance. So the protocol would say this person needs to liquidate, let's say 10 AVAX to be able to keep their loan in good standing. And so what happens there is the AVAX are offered to, I'll say the public, it's not quite how it works, but essentially to the public. The public can come buy those AVAX assets at a discount that gives the protocol the stablecoin or the other asset that's required for that user to be in good standing. And now that third party that purchased the assets at a discount has to go, well, they can either keep them if they want, but in most cases, via flash loans or different protocols, they then go and liquidate those assets on exchanges, take their arbitrage profit or activity profit, and everybody walks away happy. Aside from maybe the user who had some of their position liquidated. But it's fairly standard. It's what keeps your loans in good standing. And it's what keeps the protocol solvent.
Wow. Yeah, that's a really cool model. I think what's cool about it is Banky isn't managing either side of that. It's a user on one side and it's another user on the other side managing the liquidation. So very decentralized. So good stuff. Appreciate that explanation of liquidations. So let's get some thoughts from the Pangolin team then. So the original topic was just assets, blue chip assets versus native assets. Does Pangolin also consider these in different classes when assessing risk on the Pangolin app? What do you guys think, Justin and Brandon?
Yeah, so there's definitely a classification which makes a lot of sense, right? So if you look at some of the kind of I guess early literature of DeFi, it talks about different pools, and based upon those different pools, there's different risk factors, and with great risk comes great reward, right? So when you see these pools and you see crazy yield returns, that as an investor, you have to be rewarded with higher yield for taking a higher risk. That's kind of a natural market mechanism. I definitely agree in blue chips. I'm a big fan of blue chips myself. I think it makes sense as part of a diversified portfolio. So yeah, I definitely think there's a classification of tokens, and I think we'll only see that increase as we get different types of instruments coming in, and those instruments will have different risk profiles. I don't think there's a uniform or mature classification system. One you can start seeing developing throughout the ecosystem, but I don't think we have enough data to really have really clear ideas. And what I mean by that is, you don't have tokens that have performed for 5 years, so you can look for correlating trends between categories of tokens. I think that will come, and I think a mature investment firm and research firms are already starting to make great strides in that approach, but I don't think we're there. And that's the exciting thing, right? So like, how do you classify these tokens? How do you, as an investor, choose which tokens you want to invest? How do you then match that to your risk profile? Yeah, so it's a very broad topic and quite a cool topic.
In traditional finance, there's a whole slew of ratios used to kind of gauge performance of different assets or companies or projects. But one that seems to be pretty standard, at least in DeFi, that kind of crosses over, is just longevity of a project. So almost when anything new, especially native projects, pop up, there's cries from everywhere saying, is this going to be a rug pull? Like, I saw this thing, it meets this criteria. And then as time goes on and you learn more about the development team, you see the product, you look at the UI, you can audit the contracts, that fear goes away. And so I think, some of these blue chip assets are just assets that have been around long enough to establish a greater track record than the competition, which puts them in that category. And so Avalanche is being a younger network comparatively. I think you see some of the same thing with the network itself. So as projects are contemplating coming over, that's something they look at too, saying, wow, the tech is amazing. but it's only been around for, a year, 2 years. Let's just wait and see what happens. That's that same risk reward trade-off. But at the same time, I don't want Avalanche to be this island where we're definitely not hostile or against other assets. So, there's been pushback of like, why is there like Ethereum or, some other assets that are not native to Avalanche being traded and incentivized to have liquidity on Pangolin? And I think we need to ensure that we're a place where traders can come and hang out in Avalanche, and especially Pangolin, and have access to all the assets they want without needing to bridge out and go someplace else. Like they can be fully at home on Pangolin.
Yeah, that's great. So to summarize from Pangolin, Justin, and Brandon, I think Justin was talking about how blue chips definitely have a different risk profile than new tokens, and there's not a lot of data yet to really accurately classify the risk on these. And from Brandon, he was mentioning how as Pangolin, we want to provide a wide range of tokens for users to trade or hold or invest in, which is why we are supporting both native tokens and tokens from other networks. It's a really good topic and really good question. Appreciate the answers.
One more thought actually there, Leo, if you don't mind. From a lending protocol perspective, there's a few other things that we have to consider, and that is the availability of appropriate price feeds. So there's a reason that most lending protocols use Chainlink, and that is one of the major exploit vectors is if you can run the price of an underlying asset in a certain direction without much challenge. Chainlink obviously requires a certain amount of liquidity, transaction volume, exposure on different networks or different exchanges to be able to create kind of an aggregated pricing structure. Which is what then underpins liquidations and solvency on the platform. So another limiting factor from a security standpoint, risk mitigation standpoint, really is not only do the assets exist and do we believe that they will exist going forward, but how do we actively monitor the relative risk of those assets, and what would be the impact of cascading liquidations of a smaller market cap asset where the price can only be taken from Pangolin and a smaller, centralized exchange possibly somewhere. The associated risk with that is incredibly high, and so that's another thing for projects, to be considered for lending protocols. We have to think initially about the solvency of the protocol, but also what that would do if we had a whole bunch of lending and borrowing activities on an asset. If their only liquidity a pool really is listing on Pangolin, we have to consider what are the impacts from a risk perspective. Is there an exploit risk? How can that price be manipulated? Can we protect against that? What would the impact of cascading liquidations be on that asset? Is it big enough to handle that, or would that in and of itself potentially lead to insolvency of the protocol? So there's quite a few things that are actually out of our control. It's not just a matter of what we believe to be conservative assets, but from a security and liquidation management perspective, there's quite a few boxes that have to be checked, at least in the current way that DeFi operates. Over time, hopefully, we have some different ways to aggregate liquidity from different networks and different ways to assess risk. But for now, we have to go, especially from a decentralized perspective, we have to go with what we have a high degree of confidence in from a risk perspective.
Yeah, that's a really important topic you brought up, is Chainlink and price feeds. And just doing a time check, we only have a few minutes left. So I think we can make this our last topic, is Chainlink and price feeds. And I know that Justin and Brandon have a few thoughts on this as well, since we did just meet with Chainlink and kind of learn their criteria and their model. Justin and Brandon, can you tell us a bit about why reliable price feeds are important, what kind of risks there are if you don't have reliable price feeds?
Sure, I'll jump
Yes.
in. Sorry,
Yeah.
Brendan, I'll let you lead. Sorry, man.
Sure, yeah, I'll lead us off and I'll let you kind of close in then. Does that sound? So just kind of developing out in DeFi or any sort of software, especially when there's money and financials at risk, really that first look you have to go after is the vulnerability, the vectors of which you're writing. So if we develop something that's amazing, super innovative, super out there, but it gets attacked. It doesn't matter how cool that is. No one's going to use that, and you've probably soiled the reputation of not just that particular project, but the team involved there as well. So as you get into some of these things where you're looking at off-chain data or aggregating data from other chains, you introduce these things called oracles. It's kind of what we're going at. Which is essentially a way to decentralize the input of data for something that's off-chain, and use it on an on-chain application. So lending seems to be one of the really big applications of this, where you need to know an accurate price in real time that's not manipulated. And so some people, in a naive sense, will go after Pangolin and say, they use liquidity pools with two assets. We'll just divide asset A and asset B, and that's the rate of that asset. And I mean, I'm sure most developers think, hey, that seems to work. That's fine. But the problem is you can come after that with attacks like flash loans, or just manipulating it with big bags of money, and then doing other things on top of it where that rate is temporarily wrong. So something you can do, even with an oracle, is you can come after one source that oracle pulls data from, and you can manipulate that. And so something Chainlink does really well, it's actually rather impressive, is the amount of sources they pull data from. So even if you get to one of these sources or you get to two of these sources, they're taking a median of all that data, and overall the quality of data and the feed coming from that is still going to be trustworthy and very robust to manipulation. And Chainlink definitely seems to be the best that's doing this out there. Not to say there aren't competitors, but I think you'd be a fool not to look there first.
Yeah, great answer, Brandon. I'll just kind of, how do you, I'll just kind of talk a little bit about how I try to understand these things. So generally, you can learn from what's happened in the past. So there's a news site called Rekt News, so REKT.news, run by Julian. And basically what it does is it provides autopsies of the biggest hacks in DeFi. And that's how I learn, I guess, what not to do. So let's talk a little bit about Venus. So Venus was a protocol on BSC, and what they did was, they provided an asset, their own underlying asset. And they had actually, weirdly enough, they did have a Chainlink price feed for that asset. Now, the big issue with that is because that token was only available on one place, it was very easy to manipulate that price. So, for example, if Pangolin is only available on Pangolin, it's very easy for someone to take a flash loan and manipulate that price point. This is why, when Chainlink wants to list a new feed, they specifically ask you for certain criteria that you need to match. One of those criteria is having that token listed on multiple sexes. Now, I was told I pronounce sex weirdly because of my accent. So what I mean by that is a centralized exchange. I'll probably say centralized exchange from now on. So basically what they ask for is that you have your token listed across multiple centralized exchanges. And this basically it broadens the attack vector, right? So if you're going to manipulate a price, you'd have to manipulate it in multiple places. So really this is what about these safety concerns are, because with lending solutions, the attack vector becomes a lot more challenging and a lot more lucrative for white hat or for black hats, and arbitrage. Well, it depends whether you call hacks or arbitrage opportunities. It's a bit subjective. But bringing oracles and flash loans and lending solutions greatly increases the frequency of people attempting these types of attacks. So in that regard, we as a community have to ensure that we keep our community safe. The worst thing in the world I'd want to happen to Avalanche is a 10 million hack and people losing their money. So for that, we need to make sure that, we ask these questions. We can ask them in good ways and in constructive ways, but it's very important that our community, and this is why I love Banky, because you know, when the issue's raised, they answer it, they're transparent, you know, they have very good approaches to security. They've chosen a very good blue chip token set, in my opinion. And I've got a lot of respect for the team and what they're doing. And these are these questions that we have to be asking. I don't think it should be taken as an attack if we ask these questions. It's just lending and oracles do introduce extra risk into our nascent ecosystem. And we need to ensure that the tokens offered on lending protocols match some criteria to ensure that that risk and attack vector is minimized. So having Chainlink, having the feeds obviously is very important. They shouldn't be using Pangolin as a price feed. That's what happened with all, the hacks on BSC. They were using TWAP, which is your weighted average. So that's where all those hacks happened. And there were about 5 or 6 projects that got hacked on BSC for the exact same exploit, which could have been prevented if people in the and they just didn't fix it, it blows my mind. So I think this is where, you know, having a collaborative community, a community that talks amongst ourselves, that talks about best practices, that's going to help all of us within this community.
Awesome. Thank you for that insight. Yeah, I think it's really cool to hear both the Pangolin team and the Banky team just emphasize safety and security over, quick innovation. I think it's easy to fall into the trap of wanting to add more features, add more tokens at the risk of user safety. But both Pangolin and Banky don't have that philosophy. They have a safety first philosophy, which is great to see. Okay, that was a good topic. Chainlink, price feeds, safety, and we've reached our time right now. So if you have more questions for JD and Banky, please check out their Telegram, their Twitter, their docs. If you have more questions for Pangolin, stop by Telegram and Discord. The team is around. Do you guys from Banky or Pangolin have any last words for the audience before we end today?
Yeah, I guess just thanks to everybody for taking the time to come out. Obviously, there was a lot of questions in the chat. I think that some people may not have had answered. So if you want to come over to the Banky Telegram channel, we're happy to have those discussions there, of course. Pretty exciting future ahead of us, both for Pangolin, Banky, and I guess for the broader Avalanche ecosystem. Stay tuned to our Twitter. A lot of exciting stuff coming out very, very soon. So make sure you come check us out, say hi. We're happy to answer any questions, and keep your eyes peeled for some upcoming announcements. And thanks again, everybody, for your time. Thanks, Pangolin dudes, for having us on here, and look forward to speaking to everybody sometime again here.
Cool. Thanks, JD. Brandon and Justin, any last words?
No, not much for me. If you need any help or advice, or if you want to see what we're doing, just reach out to us on Telegram or Discord. We're always around.
Yeah, for folks that might not be aware, there's already been a couple of things addressed in Pangolin, Telegram, and Discord. People coming through with suspected vulnerabilities and kind of flushing those out to a solution to kind of help the whole ecosystem. We had an issue this morning that popped up. Someone in Telegram found something that didn't look right, troubleshooted it, fixed it, and sure enough, in like 30 minutes, it was done. That's a level of support you don't really see in traditional finance. So anybody using, either one of our apps, if you pop into chat with something that's going wrong or something you'd like to understand, there's almost all the time somebody there willing to listen and kind of walk you through it. So stop by. We'll see you there.
Cool. Thanks, Brandon. All right, that's the end of our AMA. Thank you, JD, for coming by. Thank you, Banky, and everyone have a great day.
Bye all.